Does a $75,000 salary still get you a set of keys in 2026, or do you strictly need a six-figure income just to get your foot in the door? We all know home prices have spiked over the last few years, and as a result, not everyone knows if they can afford the dream of home ownership anymore. I'm going to slide through these income brackets and show you exactly what your paycheck buys you in our current market. Along with that, we're going to cover why, even as home prices are thankfully starting to level off, affordability feels worse than ever before, and specific moves smart buyers are making to stay comfortable and not house poor. This isn't about scaring you. It's about replacing the hype with real local math so you can make a better decision. Before we look at the salary brackets, we have to talk about the three things that actually determine your budget, because the price of the home is only one piece of this puzzle. So first, let's talk interest rates. Even a tiny change, like 0.5%, can swing your monthly payment in either direction. And the larger the loan amount, the greater the swing. Second is your total cash to close. The most important thing to know is that this amount isn't just made up of the down payment. It's the down payment plus the cost for services from the lender, appraiser, inspector, and title company. It adds up. Just be aware of it. Sometimes people forget these and it kills their budget. Now, third, your monthly payment is made up of more than just your loan repayment or your principal and interest. You'll be paying property taxes, insurance, and utilities. You may already know all that, but just be sure all of those expenses are accounted for within your budget. Now, as we run through the examples, keep those three things in mind, because the right home isn't about the loan approval letter. It's about sleeping well at night, knowing you can pay the bills. Okay, let's look at the numbers. As we're getting started out in 2026, a typical South Dakota home is sitting in the low to mid 300,000s. That's not terrible, but it's also not cheap. The good news is, though, there are plenty of options well below and above that price point. Now, in terms of these examples that we're going to go through, I'm going to be using safe, conservative numbers. As far as interest rates, we are going to track with the national average. We're assuming you spend about 30% of your gross income on housing. And to make this a little bit more like real life, let's say you also have an existing loan or a few smaller loans that come to a total of $500 as far as your monthly payment. And while you're not maxing out your credit cards, you do have two with balances. Let's start with a household earning $50,000 a year. Your housing comfort zone payment is around $1,200 a month. That puts you in a price range as far as homes between roughly $120,000 and $150,000. So what does that look like? You're likely looking at smaller homes that are older, or you could also check out some condos and some townhomes. Now, for those of you living in the metro areas in South Dakota, you can widen your search to communities a bit further out. You might find some gems. Think of areas like Baltic, Del Rapids, or Canton, or some other rural counties. The trade-off here is usually a longer commute or an older home that, quite frankly, it might need some love. But here's the good news. Ownership, absolutely still possible here. Next up, annual income of $75,000 a year. Now, your comfort zone bumps up to around $1,900 a month. That opens up homes in the $220,000 to $260,000 range. Suddenly, you're seeing 2 or 3 bedroom homes. You might even find some newer construction if you look outside the core metro areas, places like Brandon or the outskirts of Rapid City. Honest truth with these, though, this is where buyers start to feel the pinch. As you can see, it's definitely doable. You just have to be disciplined with your other debts. Now, let's look at the $100,000 a year earners. Your budget sits comfortably with a monthly payment of around $2,600 and gets you into homes within the price range of $290,000 to $340,000. Homes in these areas are often supported by strong schools and established neighborhoods in areas like Sioux Falls and Rapid City. You might get more layout options and bigger lots. You still feel the interest rates here, but I think you have way more room to maneuver. And finally, those households making $125,000 to, let's say, $135,000, your comfort zone is going to be around $3,300 in terms of your monthly payment, which would lead you buying in the range of $400,000 to $475,000. This is where you find some of the newer builds, renovated homes with premium finishes, and some of the more highly desirable locations. All right? So who is actually feeling the most pressure right now when we're talking about affordability? Well, you probably saw from the graphics, it's usually households earning between $50,000 and $70,000. Why is that? Because while home prices have maybe only risen a little over the last year or so, we can't ignore the drastic increases from a few years ago. For the buyers who have started looking in the last year, they're feeling the results of things like the property taxes rising and homeowners insurance quietly climbing in the background. For first-time buyers in this bracket, the barrier usually isn't the monthly payment, it's the upfront cash. Coming up with that down payment and closing costs while paying rent is tough. I said earlier that prices haven't continued to skyrocket, but affordability is almost feeling worse. Here's exactly why. It's the layering effect. First, we'll look at property taxes. A $300,000 home in Sioux Falls can easily carry a $4,000 annual tax bill. That's hundreds of dollars a month people forget to budget for. Next, location math. Two families can make the exact same income, but if one buys in a high tax district with a long commute, their real disposable income is way lower. Okay, enough with the bad news. Here's what you can actually do about it. If you're a first-time buyer, focus on down payment momentum. Even small savings help. Pay down consumer debt like car loans to boost your buying power. Look into South Dakota housing programs. There are grants and assistance programs specifically for first-time home buyers just like you. Then if you're a move-up buyer, don't shop emotionally, shop strategically. Leave room in your budget for maintenance. And I've said it before, I like the idea of prioritizing resale value. Schools and location matter more than the granite countertops. Here's the bottom line with all of this. Affordability in South Dakota just isn't about how much you make, it's about how well you plan. Whether you earn $50,000 or $150,000, there is a smart path forward. It just might look different than it did 5 years ago. And that's where I come in. My job is to help you find the mortgage that fits your life, not just a spreadsheet. So guys, if you found this helpful, please hit like, subscribe, because I come out with videos like this every week that I hope are helping you make smarter and informed decisions. Take care.